Greetings of the day everyone and welcome to the fourth chapter of CSR. Today we are going to learn about the development of CSR in India. As we learned in the last chapter that the concept of CSR originated in the USA in the 1950s. The same concept came to India in the 1970s. The concept was proposed by Sachar committee who introduced it through the concept of social corps benefit. Now, this concept of social cost benefit mainly look into the various economic risk and the uncertainties a probable project will have while conducting it. It also analyzes the impact the project will have on the environment and the society. Now, Tata Group, even today and even in the earlier days, was known to be one of the first companies which supported not only the CSR activities but was also known to be a company which followed very ethical policies. Now let's look into the role which was played by the 5-year plan in the developing of the concept of CSR in India. Now, there are two instances wherein the CSR was officially discussed in a 5-year plan. Now, the first time it was discussed was in the 9th 5-year plan in the year 1971. Now, in this 9th 5-year plan, it did not have a great impact on the CSR activity, or not much was discussed with regards to the implementation of CSR activity with regards to the companies. But the fact that there was even a slight discussion made in that earlier period of time, it was a huge deal for the growth of CSR in India. The second time when the CSR was actually discussed in a 5-year plan was in the 11th 5-year plan in the 1981. Now, during the 11th 5-year plan, there was actually a huge growth which was seen compared to the 9th 5-year plan. Main focus which was given on the various ethical functioning and also with respect to the workers' right and with respect to the environment. In the 5-year plan, CSR, in the 11th 5-year plan, the concept of CSR was actually highlighted and it created employment opportunity. It also discussed about the duty of the corporation to give back to the society, which is actually a very basic thing in the concept of CSR. Now, with getting into the actual development of CSR in the 2010, in the year 2010 was actually the time where they were discussing about formulation of a new Companies Act and to replace the old Companies Act of 1956. Around this time, there was a discussion which was brought about with regards to adding the concept of CSR, which should be made compulsory on the company. So this was discussed in the Rajya Sabha. There were many questions raised before the expert. Few of those questions were, first one was whether CSR should be mandatorily imposed. The second question was, what is the percentage of CSR, or what is the percentage of the profit, or what is the percentage of the turnover should we take for the activities, for the social activities? And another question which was raised was as to which sector should be included for the concept of CSR, or which sector should be included where the contributions will go through. Now, by 2011, the Ministry of Corporate Affairs released the National Voluntary Guideline. Now, this was on the basis of the social, environmental, and economic responsibilities of a business. We have studied a gist of this guideline in the principle of CSR. So, let's move on to influence of SEBI on the CSR. Now, firstly, we need to know SEBI means the Security and Exchange Board of India. It is a regulatory body which looks into the security and the commodity market in India. Now, SEBI felt a need to make CSR activities compulsory. Now, from their part, what SEBI did was, after it felt the need of the development, they came up with a legislation which made CSR compulsory for certain companies. Now, what are these certain companies? These certain companies were the companies which were divided into two types of companies. Now, first, companies which were registered under the Bombay Stock Exchange, and these were the top 100 companies. And the second category of the companies included the top 100 companies from the National Stock Exchange. Therefore, this was totally based on the turnover and the ultimate share value price. Therefore, making CSR mandatory for the top 100 companies. Okay, this was way before the 2013 Act came into existence. Now, let's look into the CSR under the 2000 Companies Acts. Now, the major points here we have to remember here is the section, the high level committee which led to an amendment in 2019 and a small changes which were made in 2014. Now, the definition of CSR in 2013 Act is non-existent, but the CSR rule under section 2C defines CSR as a project or a program or activity which shall not be from a point of a business or a profit of the company. Therefore, with regards to CSR 2013, it mentions only two things. Firstly, the applicability of CSR, and secondly, the percentage to be paid by the company. Now let's look into the percentages and its investments. We have to understand that only 2% of the net worth, turnover and net profit will be included. Okay, so therefore the net worth will be of 500 or more, the turnover will be 1000 crores or more, and net profit will be 500 crores or more. Therefore 2% might seem a small amount, but compared to this huge number, it's a very big amount. Therefore, let's go through what net profit, net worth and turnover means. Now net profit is the profit that any entity makes. It includes all the income. Therefore, whatever the revenue comes from the business is the gross profit, and then the expense of such includes rent, income of the employee is deducted. Okay, so then what remains becomes the net profit. Now net worth is nothing else but the asset which is there minus the liability, thus giving us the value which is the net worth, and the turnover which is similar to the net profit and includes the amount earned from the sale or the supply before deducting the expenses is the turnover. Okay, now let's look into the committee of CSR which was formed. Now it was made mandatory to form a CSR committee which will help so that the whole functioning of the CSR activity is done in a very practical and systematic manner. Now firstly, it was needed that a CSR committee should be formed which included various criteria for different kinds of companies. Now for a public company, it became mandatory that there should be 3 or more directors, out of which there should be one independent director, and these people will lead the CSR committee. Similarly, for a private company, it became necessary for 2 directors, out of which one director has to be independent. In the case of a foreign company, they made it compulsory for 2 directors. One will be who will be in India and one who will be in abroad. Now, it is very important to understand that whenever we conduct a CSR activity, it should be in India and for the Indian people. Okay, and for the Indian society, and a CSR activity therefore cannot be conducted outside India. Or it doesn't matter if it's a foreign company, but if it has their branches in India and if they are in the Indian locality registered under the Companies Act in India, then it becomes compulsory that this CSR activity is conducted in India itself. And also it should be understood that whatever benefits you're giving for the employees and their family, it cannot be considered to be as the CSR activity. It should be for the people who are not your employees, and should be people of your society where your company is situated or your factory is situated, or it can be towards any good cause which the company might or company values might support. Now under Schedule 7, there are various activities which a company can take up for CSR. Now it may include various activities with regards to education, health, environment. Now it may also include the employment enhancing vocational skills, or even with regards to removal of hunger. And nowadays, after the COVID-19 situation, the PM fund was also added to the as a CSR activity. Now adding PM fund to the CSR activity has increased the amount of CSR activity in India twice the amount of what it did last year. Now let's look into how a committee devises a policy as to how they will go with this whole CSR project. Now firstly, they need to decide out of this certain activity, these 10 activities which is mentioned in the Schedule 7 which we just studied about, which activity they are going to invest in. Now it's wholly on the basis of the company if they want to invest in one project or one activity, or if they want to invest in the multiple activity. This is all on the discretion of the committee and the company. Now all of this is done in the beginning of the year, that is in the beginning of the financial year, as it's very important for the company to plan the whole thing and then only move forward with it, as the company invests a lot of money in such activities. It is also need to be seen that all these what is going to happen during the CSR activity is discussed with the board. It's very important for your shareholders to know where the money is going to be invested. So it becomes very important everybody knows during the board meeting what the CSR activity is going to be for that year. Again, one activity is compulsory, but you can have more activities which you can include. Now, during this board meeting, they will discuss the frame of the project and also include the accounting process which will be used, and this should exclude the activity which was otherwise be used in the normal course of business. Now, with regards to this CSR expenditure, how can this 2% be spent? So firstly, it's very important to know that the 2% should be with regards to the 3 immediate preceding financial year, okay, and shall not include any activity apart from what is mentioned in the schedule 7, okay. Only whatever is mentioned in the schedule 7 should be used. Now let's look into the 2019 amendment which we were talking about. Now this 2019 amendment actually spoke about the surplus amount or the excess, what a company will do with if there is an amount which is remaining from that 2%, or if the amount is not fully spent, or they went above the budget and they were not able to spend the amount which was mentioned during the meeting or during, okay. Now this amount should be deposited in a separate account. A separate account should be made for this unspent amount. Therefore, after the CSR activity is completed and the company realizes that it has a certain amount which is unspent, now this unspent amount should be transferred to an account for which is specially made for this unspent amount, and such money whatever is there in the unspent account must be utilized next year or must be utilized within 3 fiscal years. The money should be spent in India and not on the outside project. This is very much stressed into. Now, similar to how we send reports with regards to the annual report and the balance sheet reports to the Ministry of Corporate Affairs, a similar report about CSR needs to be sent to the Ministry of Corporate Affairs annually. Okay, now the responsibility of sending of such a CSR activity or such a CSR report is on the director. Okay, this was heavily emphasized in the year 2019, as when the act was introduced in the year 2013, a lot of companies did not take CSR seriously, so it became very much mandatory through the 2019 amendment. There were also heavy penalties which were imposed on the companies who came under the ambit of CSR and did not comply with the CSR activities. Now, these penalties include fine from 50,000 to 50 lakhs, and also with regards to the defaulters, they may be fined between 50,000 to 5 lakh, okay, and consecutive offense which may go to 3 years of imprisonment or both. So in today's chapter we learned about the development of CSR in India with regards to the 5-year plan and also the discussion in the parliament, and we also discussed about the influence of SEBI in the growth of CSR. We looked into the section 135, the overall section of 135, where we looked into the schedule 7 in which there were various activities which were included. We also looked into how a policy or a CSR is conducted, the policy which is devised, and we also looked into the final thing which we looked into was the penalties and the 2019 amendment which regards to CSR. So thank you so much, and I'll see you all in the next chapter of chapter 5. Thank you.